Hey everyone, welcome back to the Chain Reaction Podcast. I'm your host, Tom Shaughnessy, a co-founder at Delphi Digital, where we're 5 full-time analysts focused on institutional crypto research. If you aren't a subscriber, you're missing out, so visit the site while you're listening. One quick housekeeping item. This podcast is strictly informational and educational and is not investment advice or solicitation to buy or sell any tokens or securities or to make any financial decisions. I may personally own tokens that are mentioned on the podcast, and you can view the show notes for our full disclosures. Hey everyone, welcome back to the podcast. Today I'm thrilled to have on Joey Krug, who's the co-founder of the predictions marketplace Augur and is also co-CIO of Pantera. Joey, how's it going?
Good. Thanks for having me.
Yeah, of course. So Joey, let's dive right into this. How did you get started in crypto and what year did you get started in?
Yeah, I got started in crypto in 2011, initially just with mining Bitcoin. Basically at home, I was mining Bitcoin, came across it on a forum called overclock.net and thought it was really cool. It's just really wacky, idea to create a currency that wasn't created by a government.
Yeah, that's definitely a good on-ramp there. And I guess, did that lead you to co-found Augur, or what was the roadmap from you discovering crypto to Augur?
Well, so, after Bitcoin, so I mined Bitcoin for a bit and then didn't really do a whole lot again until, 2013, 2014, when I started paying much closer attention to the space. And around that time, Ethereum had started to come out. Ethereum was in the proof of concept phase in 2014 and really started thinking a lot about, what sort of applications are interesting in the space and what sort of things make sense for, the benefits of blockchain tech in general, things like censorship resistance, being able to enter transactions with very minimal trust, that sort of thing. And I eventually ended up kind of realizing that things that don't touch the real world too much are probably some of the best use cases. And so that's kind of how I ended up settling on betting and trading. So prediction markets are really just synthetic markets on any real world event, anything from a presidential election to, an English Premier League match. And so that's kind of how I got excited about that and thought it was a sort of constrained problem set to solve versus, say, trying to tokenize, real estate or something like that.
Now, that's interesting. So when you're thinking about creating Augur for prediction markets, and you talked about digital versus the real world, I guess, how did you think about what would happen on Augur? Because we have casinos, everybody's friends have bookies that they use for sports betting. Like, did you think about this more as a predictions market to bet on events like strictly within crypto and blockchain, or did you expect this to move into, say, the real world and real world events?
Yeah, I didn't really think anything about crypto and blockchain specific, to be honest. The way I saw it is you could take, what Bitcoin did, which is enable no limit transactions peer to peer from party A to party B, where neither person knows each other anywhere around the world relatively quickly, and apply the same concept to betting and prediction markets. And so that would mean, in practice, a global marketplace where you have peer to peer, low limit bets at very low, fees and very low friction. Right now there's a bunch of problems with Ethereum and Augur itself that make it difficult to use and make that not really true in practice. But I think that's kind of the longer term vision is you have no limit, where nobody cuts you off for winning too much. So there's no censoring of sharp bettors. And, it's not a bookie based model. It's peer to peer. So it's kind of like a global, almost like a global version of Betfair with fees that are close to zero.
That's awesome. And yeah, I feel like sports betting today is a lot of, hey, I know a guy and we transact over Venmo, and a lot of it is unclear. A lot of it is putting a lot of trust in somebody you don't really know. Do you think that a lot of those, not gray market activities, but harder to bet type scenarios like that, do you think a lot of that's going to move to Augur when, these UX issues are addressed, to your point? Or it might not be strictly UX issues, but I know that Ethereum needs to scale, and I know that you guys are also working on a lot of updates for Augur as well.
Yeah, I think so. There's no reason why you should have to trust, some random person on Venmo, or even if they're your friend. It's much easier to have. I think markets work better when they're global. Markets work better when there's more liquidity, and if you're betting through, a local bookie, who's then replaying your bet on like Pinnacle or some other site. You have kind of cascading effects, right? Like your local bookie has a limit, which is probably lower than Pinnacle's limit. Pinnacle has fees and limits. And then your local bookie probably has fees and limits on top of that. And the experience kind of degrades the more limits and barriers you put in place between you and the actual market. And if you look at, Wall Street, what's happened over the past 2 decades is those barriers have kind of started to be removed. Nowadays, as an end user, it's very easy to get a brokerage account. People can say what they want about Robinhood. They do sell their flow to HFT traders or whatever, but it's still a pretty good experience for the end user. You sign up, you place an order, it gets matched, and then you're done. And so if you look at betting, it's the complete opposite of that. Betting is still like the commodities pits days. If you want to make a $10,000 bet in Vegas, you need to hire runners who run to, different casinos and place the bets all at the same time before the line gets moved too much. And then if you start winning, you get cut off, or your limits get decreased a lot. It's like commodities pits days in Wall Street, if you want to use that analogy. And so I think it makes total sense for it to be online. And it also makes total sense for it to be, an actual marketplace. And so the cool part about Augur is once a few of these main UX issues are fixed, it can start working well for really small groups of users at the beginning. It doesn't require everybody in betting to be on it to be functional. Even right now, there's markets on Augur that have better odds than, Vegas or even Betfair. The problem is they're denominated in Ether, and that's not very useful if you think you have a 1% edge on sports betting. Doing the bet in ETH probably wipes out your edge due to volatility. Those are things that are going to change, pretty quickly.
That's awesome. It's great to see that you guys are having such a keen focus on addressing the UX, because it's definitely a pain point in crypto. And to your point on sports betting there and other types of bets, you guys are the protocol built on Ethereum. So do you think that people moving forward are going to resonate around kind of the Augur UX you guys built out, where people could trade and make bets and report? Or do you think that a lot of this is going to take the place of other entities or even companies building out, say, a real world betting UX for, say, sports betting, and then maybe more of a crypto UX to bet on crypto and blockchain events like will phase 0 on ETH, ship before January 3rd, things like that? Or is it kind of like those are high quality problems at this point?
Yeah, I think that's something that, will happen. People are already starting to build some interfaces on top of Augur. There's one called guesser.com, which is a pretty simplified betting interface. So I think it's going to be a mixture of both. You'll see some people just use kind of the default IPFS hosted decentralized UI that's kind of, fully open source. You'll see some people build various things on top. You'll see some people build UIs on top, and then they'll place their own markets ahead of everybody else's and try to kind of run a bookie on top of Augur or something like that. I think you'll see a wide kind of range of sorts of use cases.
It's great to see. And, can you walk us through how somebody will open a market on Augur? Like, I'm wondering if it's gotten easier or if it's still time consuming or how hard it actually is. Like, if I want to start a market, like I'm looking on the website right now, there's an English Premier League, will Manchester beat Leicester, or I can't pronounce it. I'm not from there, but I'll pronounce it wrong. But how hard is it to open a market on Augur? Is it difficult, or how long does it actually take?
Yeah, so the difficulty isn't, it's not that hard to actually do it from like a literal standpoint. It's basically putting in a description, a title, expiration date. You post some rep and Ether as various bonds to create the market. Basically, if you create a bad market, those might get taken away. And it takes a few clicks. You can do it in a matter of, a minute. The hard part, though, is making sure your market is well worded. So, for instance, if you made a market on a soccer match, what happens if one of the teams draws? If they both draw, what happens? Things like that. Or what happens if the game gets rained out? Or if it's a soccer match, do you count extra time, or do you stop it, when the traditional clock runs out, and not include extra time for counting who wins? These are all things that, traditional bookies have created well-known rules for a very long time, but people are still kind of finding their way around on Augur, especially if you make a new market, like what will the Bitcoin dominance index be, next Friday? Well, what happens if the site that hosts the dominance index is down, or what happens if they update the data late? These are all sorts of things that make it difficult to create a market, even though from a practical standpoint, it's very minimal work.
So how much time are people putting into like all these intricacies? Like, I feel like you could spend weeks or months just running through every single scenario that could potentially happen to an outcome. Or Or is there rules around if something happens that wasn't in the rule book, like the users get their money back? Like what happens in those scenarios?
Well, there's a thing called invalidity, which means that a market is invalid. And people who, right now in Augur V1, if you buy a share in an Augur market and it gets resolved as invalid, your share becomes worth basically even odds. So if the market has 5 outcomes, it's worth 20 cents. If it has 2 outcomes, it's worth 50 cents. So you get kind of partial money back. If in Augur V2, there's actually explicit betting on invalid. So invalid is another outcome like any other outcome. And so you could bet on it. You could buy it as insurance in case the market resolves wrong, or in case the market, has some weird issue. You can get your money back, that sort of thing. The reason for allowing explicit betting on invalid is to try to kind of filter those markets out of the UI. So if a market has, a bid sitting on the book continuously where somebody thinks it's a 10% chance of being invalid, that's probably something that, most users don't want to see. And so you could kind of hide those things by default. So that's kind of how it works right now.
Got it. No, it's good that those are addressed because there's definitely, you can spend a ton of time trying to go through every scenario. And, just on adoption here, when you're looking at Augur, I don't think it's necessarily on your plate to, have to attract users to the platform. I feel like that should maybe be the companies building on top. But I guess how has adoption been for Augur? I guess how are spreads? Like, are there any, major prediction markets events that we missed that were huge on Augur? I'm guessing there was probably a bunch around the election when Trump was getting elected there. I remember seeing a lot of tweets around that.
Yeah, let's see. Right now, I'm not sure what the most popular markets are. I haven't looked at it in a day or two. Probably things like US Open or NFL Week 1. I think spreads on those are pretty narrow. They're if you run the odds and convert the probabilities, they're typically, either the best in the world, which sounds crazy to say, or in the top 2 or 3 books. If you compare across Betfair, Vegas, offshore books, Pinnacle, everywhere. And the liquidity amounts are actually surprisingly high as well. And so that's one thing that's kind of interesting is the markets are actually relatively liquid. I think right now the problem is just if you told that to somebody who's used to betting on Pinnacle or something, right? Their answer is going to be like, so what? Because it's in Ether. And so right now these markets, kind of appeal to a really niche group of people, which is people who are bullish on Ether and also know how to bet in whether it's like politics or sports or crypto markets or whatever. It's that those kind of two intersecting circles, and also the people who can jump through all the UX issues, results in a very small population. I think once those issues start to be solved, though, it kind of opens it up to people outside of that group, and it also opens it up to even if you as an end user can't necessarily figure out all the UX stuff. Say the person you're normally betting with on Venmo, right? Say that person uses Augur as a liquidity source where they get better odds. You can then get a better rate through them, even if you're not using Augur directly. These are all sorts of things that I think are interesting kind of knock-on implications of switching to DAI and V2 and fixing a lot of the UX issues.
Yeah, switching to DAI sounds interesting. I didn't think that people were that aware of their bets being denominated in ETH. Obviously they are, but I guess I just didn't think about the FX risk there on that. Are there a lot of scenarios where the price of ETH is just so volatile where even if somebody wins an outcome that they'll just lose money? Or is that the right way to think about it?
Yeah, it is. That's one way to think about it. And I think that happens, all the time, especially because in Augur V1, markets take, weeks to pay out. In V2, that's changing and markets can pay out, as soon as a day. Probably not absolute worst case, but in practice, the worst case is probably like a week or so. Versus in V1, you have some markets that took 2 months to pay out just due to the way reporting worked in V1. And so that basically means that, you're exposed to a lot of FX risk on ETH price in V1.
That's interesting. And on the reporting side, it seems like there's just a ton of debate around oracles. And I feel like a lot of those debates have been centered around MakerDAO just because of the interest there. How do you guys handle, I guess, oracles and reporting? And I'm sure there's a lot of moving targets here and a lot of technicals, but I guess people are most interested in, you guys aim to be very decentralized, but I'm sure the oracle question always comes into play here. Is this something you guys wrestle with, or was this addressed in V2, or I guess how are you thinking about this?
Yeah, well, so the whole kind of point, of Augur itself is that we aimed to solve the oracle problem for use cases where you don't need immediate kind of frequency of Oracle feeds. And so what I mean by that is, provided you're not like margin calling someone where you need, the price of an asset on a second by second level, Augur works for those use cases. So the example would be, say you have something where, you need a result within a few days or a week or whatever. Augur can kind of fulfill that use case. And that use case works pretty well for things like Augur markets. It doesn't work for things where you need, what I call the fast Oracle problem. But for the slow stuff, Augur is designed to be kind of the most, secure use as you can get for solving the Oracle problem. It has this system that's kind of very similar to some of the older proof of stake ideas, where you're basically putting up collateral. If you go against the consensus, you lose money. The system can fork into multiple networks if people disagree at a very kind of high stakes level. And that's kind of the high level overview of reporting. You basically lose money if you report against the consensus. And in exchange for doing that, you get, a portion of the fees that flow through the network. And so if you look at Augur, if you think about a market like, say, a sports match, bettors do expect to be paid out relatively quickly. But if you can't solve the Oracle problem faster than, say, the market resolves in 36 hours, you need to figure out a way to address that. The simplest way to address it is for people to run these sorts of arbitrage bots, which becomes cost effective in V2, where they say, okay, I'll buy your winning position at, 99.9 cents on the dollar. And then they'll wait the 36 hours and basically they'll get the time value of money for themselves. So that's kind of a way of addressing that problem. That only works for certain use cases. It works well for like prediction markets and betting markets where you kind of have a final resolution, but it doesn't work for things like, margin calls or that sort of thing.
That's interesting. And on the reporting side, has there been any massively contentious issues in reporting? Like, have there been any major rifts in the community on any markets so far? I'm just wondering, like, what would happen if there were a rift? And I mean, I'm assuming people could fork Augur, but I'm not sure exactly what would happen to the value of rep then in the two different worlds that would basically come about.
Yeah, so there have been disagreements. People kind of debate things regularly on reporting. There's always something people are kind of talking about. The biggest one was probably in 2018 in November or so. There was a market on U.S. not presidential, U.S. Congressional election, and it said, will the Republicans win? I think it was for the House, or I forget if it was for the House or the Senate, but maybe the House. Will the Republicans win or not? And the market expired, after election day, but before people actually took office. And so there was debate over, how should it actually resolve? And people ended up resolving it to what the election result was. They didn't kind of pay attention to the technicality of, the people haven't taken office yet. They just resolved it to how the election actually played out. That's probably the biggest dispute Augur's ever had.
That's awesome. It's good problems to have when your protocol is growing. And switching over a bit to Augur V2, you guys shared your blog post a couple of months ago. I think it was back in April. And you guys were talking about a number of upgrades to your platform. And a lot of them go back to what you talked about before and just reducing hurdles so you don't lose people when onboarding them. I guess for the listeners, what's the takeaways with V2? And I guess any major changes would be helpful, and the goal of those changes in helping to drive Augur forward.
Yeah, so the main changes are, one is people can bet on whether markets are invalid or not. That's important because it allows filtering those markets out so average users don't have to think too much about it. The next one is adding support for DAI, so people can bet in a currency that's not too volatile with respect to the dollar. That's really important because if you have a 2% edge in betting, which is a lot, you would be super wealthy better if you did. And if you say you have a 2% edge, ETH currency volatility will wipe you out. So there's no reason to bet on Augur with Ether. But with DAI, that's not a problem anymore, or it's a much smaller problem. So that's another huge change. The third one is markets resolving faster. So in V1, markets took many weeks to resolve. That's a pretty painful user experience. It's just really annoying to wait a very long time to get your money back. In V2, they'll resolve within, on average, I'd say about 36 hours or so. And then because of the DAI changes and some other cost changes in V2, it'll be possible for people to pay people out early when a market resolves. So in practice, as a user, you're getting your payout within the hour, just like you would on a traditional betting site. So it feels like a very good user experience. Other than that, I would say those are probably all the main changes. There's a bunch of UI, UX improvements and things that take using Augur down from 25 steps to 8 or 9 or whatever. But those first 4 are the big ones.
That's incredible. So, I mean, the points you mentioned are basically huge for users that are within your platform, right? So, I mean, being able to vote on invalid markets is great because people know that if a market isn't invalid or it is, it'll be taken care of by the other people in the protocol. And then DAI solves a ton of the volatility issues. I guess, are there any major UX or UI issues you guys are addressing, not for the people that are already on the platform, but to help lower the barriers to get people on, I guess, that aren't already on the platform? Like, it sounds like all the things you addressed are amazing for people that are on the platform, but I'm not sure if it helps drive new users to Augur, if that makes sense.
Yeah, so the other category of things are improving the onboarding experience so that somebody can, actually use Augur, right? And so for that, the big barrier is that to use, to have an Ethereum wallet is actually pretty difficult for the average web user. You need to download MetaMask. You need to have, or you need to, do something pretty complicated with a bunch of steps. It's pretty annoying, kind of tenuous process. So one piece is adding additional wallet options that are much easier to use to V2. These are things like Taurus, Fortmatic, Portis. And in practice, those are a bunch of names. People may or may not be familiar with them. But in practice, from the user experience standpoint, it looks like you can choose, I want to sign up with Gmail, or I want to sign up with my phone number, or I just want to use a username and password login. And you can basically log in with these various services. And, some people may say, well, that's adding like a custodial element to it. And that kind of gets rid of all the effects. And it's like, well, not really. For these users, there's a lot of reasons why using Augur is still beneficial, even if their wallet is stored on an AWS server somewhere that's encrypted by a password. Things like better odds, no limits. That's why they care about it. They don't care really about non-custodialship beyond the sense that their money's not going to get stolen by the bookie. And so that's a really big piece. And then maybe those users eventually graduate towards using fully non-custodial wallets. If you're betting $1 million a month on Augur, you probably shouldn't be using one that's stored on AWS, but you still want to encourage that smaller user who doesn't have that concern to sign up in the first place. So making it really easy to have like username and password, Gmail, and phone number kind of logins and signups to Augur is one of them. You're not really signing up to Augur, you're just getting a wallet. The second piece is fiat on-ramping. And so getting money into crypto is probably the biggest hurdle for people who are not familiar with crypto. And there's kind of a few ways to do this. If you're a high stakes bettor, it's probably simplest to just tell people, hey, you should probably talk to an OTC desk and link a few of them where somebody can just send a big wire and get the money in immediately. For people who aren't, you can always send them to Coinbase, but that's another 10, 15 steps, multiple days to kind of get your money out sort of process. So I think there's these providers popping up, things like MoonPay, things like Wire, that allow you to onboard into wallets basically immediately using debit cards. And so I think that's a really great way to onboard people onto dApps like Augur and other dApps as well, that enables you to onboard within a matter of minutes versus, a matter of days. And that's a huge kind of paradigm shift in the UX. I think those are probably the two big things for getting people outside of crypto into something like Augur. Because once you have the crypto and once you have the wallet, it just feels like a regular web app. But if you don't have either of those things, it feels very kind of unapproachable and a little scary.
Yeah, the wallet and the onboarding for the UX, and then all the things you guys are doing within the platform sound like you're making some massive improvements. And it sounds to me like you guys have a real keen focus on addressing a lot of these pain points that we see with a ton of DeFi apps today. I guess looking forward, I think on your blog post you said V2 is slated to launch in January of 2020, which is not that far away. I guess if you guys have all of these in place, like let's say all these upgrades go well for new users to onboard and current users, what do you think the tipping point is for Augur to attract massive usage? Do you think it's fixing these things, or do you also think we need sort of a cultural shift to using the centralized prediction markets or a company built on Augur that makes it easy for my friends and neighbors to bet on the Yankees? Or what do you think the tipping point is for the massive adoption here?
Yeah, so I don't think it's a cultural shift. I think somebody who's super into prediction markets might say that, but I think from my view, prediction markets it's just an academic term for stuff that already exists, right? These cultural kind of patterns and behaviors already exist. So it's something like Augur. What we're doing is we're saying, hey, you already use this stuff, but you may have a problem, right? You may want higher limits. You may get your limits cut because you're a really good bettor. Come on Augur and kind of trade in that liquidity pool. It's not going to cut you off. It's because it's this peer-to-peer network. If you start winning on Augur, it's not like you're going to start having bet limits enforced on you. In fact, those sorts of traders are encouraged on something like Augur. The next is, people who want kind of lower fees. Bookies charge relatively high fees. And then the third is that if you want to bet on something, but you just can't, where you're from, peer-to-peer open source networks are a great way to sort of do that. So I think it's not necessarily about changing existing behavior. It's just getting existing users who have some qualm or problem about something to be able to use it, to be aware of it. And so if you look at kind of the awareness piece, I think, part of that is kind of people on top who are kind of well situated to execute, kind of traditional marketing and user acquisition plans. Makes a lot of sense. Like there's things you could do, right? You could talk to individual bookies who are currently routing orders to, offshore books and get them to just share liquidity on Augur instead. That would be one great way to bootstrap. Another great way is to literally just stock the shelves with liquidity. And so people like us are kind of doing that already. The problem is it's not denominated in dollars. And so it's not really that beneficial. But I think if you came out, next year and you could credibly say Augur has the deepest, most liquid and best odd books in the world for the top 5 sporting events at any given point in time, why would you bet anywhere else? It doesn't make any sense. You can get lower fees, better odds, more liquidity, and a great user experience on Augur, assuming, these user experience issues are fixed. And I think that's a really compelling value proposition. It's, the best odds, lowest fees, and most liquidity.
Yeah, the lock-in at that point, if you guys are able to grow to that level, is just, I think you'll have that lock-in for a long time if you're able to achieve it. And, going back to V2 for a minute, Victor Boonin, who's a friend over at Bison Trails, had a question for you. Are there any features that didn't make it into V2 that you were hoping for, or like any major features you think will come out in V3 that you wanted to get into V2? I know we might be pushing the grain a little bit here because, V2 isn't even out yet, but I guess, are there any crazy future updates or plans that you're working on the side, or maybe the foundation, not foundation, but forecasters?
Yeah, I would say one of those things might be, releasing like a UI that is more betting focused. So for V2, the main UI is a trading focused UI, kind of classic prediction market style UI that people would use to bet on maybe a political event or something. But it doesn't really show things in odds. It shows them in probabilities, which is confusing to a lot of bettors. And so one would be just kind of releasing a skin for that UI that looked more comfortable from a betting perspective. It looked kind of more like Betfair versus, say, a trading site. So that's one of them. And then the other, it depends what gets into V2, I think. The other piece of that would just be anything that's currently on the V2 roadmap that we decide to not do due to time would be kind of that answer, which is kind of a hand-wavy one. But I think that's kind of the other piece. And, for V2, we're looking at doing things like allowing faster trading using like a sidechain sort of architecture. That's something that I don't know if it'll make it in V2 or V3, but it's something that's really important because faster, cheap trading is really important for kind of adding liquidity to these markets. People need to be able to modify and cancel their orders cheaply and quickly.
Yeah, those are going to be interesting to see, and definitely would love to see them in the platform. And just switching over, since we have you, to more of the investing side, because I think this is super interesting to address Pantera for a little bit. You guys are invested in some of what I think are the coolest venture investments and ICO investments, everything from Polkadot to all the way up to Bakkt, which just, I think, got Bitcoin deposited in their warehouse today, actually, and Blockfolio and Brave. I guess at a high level, I'm wondering what your thesis is on the venture side of things. Like, what's your process for reviewing a company or a project? And do you have like a mold that this has to fit into, or more of a higher level, thesis on where these investments have to fit into, even before you dig into, the specific details of the projects?
Yeah, I'd say in terms of thesis, we're relatively open just because we're already in such a small space already that if we narrowed it too much, we might be walling ourselves off from, the next 100x kind of deal. But I think overall our thesis is really, we want to invest in companies that are bridging the existing financial system with the new one, or basically with crypto. And so that's everything from exchanges, things like Backed on the institutional side, to exchanges that are kind of more in foreign countries, all the way down to low-level infrastructure that makes it easier for developers to build on things like Ethereum. That's kind of the range of things. And the main criteria before we even dive into the details of a project is really the team. It's super important to have what I call a killer team, meaning, you talk to them and you can kind of sense the passion and the enthusiasm, and that they'd be willing to run into a brick wall if they truly believe that they could get to the other side, sort of thing. That's kind of the most important thing, as well as, market size and product. With market size, that's something that, I probably look at more these days than I used to, because even if you do everything right, you want it to be able to 100 or 1000x. You don't want to invest in a company where they do everything right, that has a very low chance of success. They do everything right, and then they only 10x at the end of it, because on average, you'll actually lose money if you invest in companies like that.
Yeah, for sure. And I definitely agree on betting on the best team and the best jockey, because at the end of the day, they're the ones driving the whole project forward from the get-go. And when you're looking at more of the layer one investments, I don't see too many on the site, but I do see Polkadot on there, which is definitely interop, but they definitely compete with, I guess, Ethereum on smart contracts with Edgeware. I'm just wondering, how do you decide, or how do you probabilistically think about competition in the space? Can you invest, are you guys open to investing in multiple layer ones or multiple layer twos or multiple privacy projects? I'm just kind of wondering if, a really cool and interesting one and a killer team comes across your desk, but you already have an investment and a team in the race here. I guess, how do you think about also moving on that second team?
Yeah, it depends how large of an investment we've made in the first one. And so we'll tell people sometimes, we'll say, hey, we really need to invest, X amount for this to be a meaningfully enough size investment for us to not want to invest in a competitor if we think something else comes up that could do really well. We're just pretty upfront with people about it. And some people say, okay, that's fine. We still only want you at Y amount. Or a lot of people say, okay, actually, I prefer you don't invest in a competitor, and I'm happy to give you, the full allocation that you asked for. So that's kind of how we think about it based on fund size. How much of a deal will we need to feel comfortable passing on any competitors in the future based on what percentage or amount of it that we own. And so that's kind of how I think about it at a high level. So we are open to competitive investments depending on that kind of scenario. And then in terms of probability, I think all of these things that are trying to, become Ethereum competitors have very low chance, because you need to understand open source, you need to understand business development, you need to understand marketing, you need to understand the tech, how to actually scale this stuff. You need to understand developers, smart contracts, what people actually want. You need to be able to make sure that it's actually still decentralized while you do all these things, and multiply all those probabilities together, that somebody understands that even if grabbing an average person in crypto off the street, even if they have a 20% chance of understanding one of them, 0.2 to the 6 is like some really small number. Yeah, it's basically zero. That's the way I think about it. But if you did, it would be a very high positive outcome from like an investment standpoint. So that's the way we think about it.
Yeah, I couldn't agree more with you on Ethereum's moat. And I'm starting to think about it personally on the level of like a developer velocity question, where a competing layer one not only has to attract enough developer mindshare, but those developers then have to go and outpace what's being built on Ethereum. And I just feel like that's extremely difficult when they not only have to build the primitives, such as prediction markets like Augur and DEXs and exchanges, stuff like that, but then they also have to throw those pieces together faster than the devs are on Ethereum. And I try not to be in an echo chamber there. I just feel like it's very hard to do that. But to your point, I think the payoff could be huge if, investors are able to get in on a killer layer one that's potentially at a great valuation, and then see it, explode.
Yeah, I think you would need, my view is that you would need to, whatever you make competing to Ethereum, you would need to support the existing infrastructure. So, Solidity, smart contracts, and even maybe the kind of Ethereum Web3 RPC layer, just because there's so much code written on those two layers, specifically the RPC layer. Rewriting Augur onto a new chain, if they didn't support the ETH RPC layer, would be an insane amount of work. And so it's unlikely in my mind that anybody who doesn't do that is going to win, just because you're right. It's such a pain to put all this stuff over. It just needs to just run. And so that's kind of how I think about it. If you look at these layer 2, kind of like sidechain architectures that are trying to launch on top of Ethereum, that are like plasma based. So things like Arbitrum and things like Matic Network, I think they have a much higher chance than the layer 1s because they support smart contracts written in Solidity already. And it's a much easier process for the developer to migrate things over. And it's also kind of symbiotic with Ethereum, and people may be more open to them.
Yeah, I couldn't agree more there. And I guess, just switching gears back to the investing side a bit, Cooper Turley, who's also a friend, and we were discussing a few of these items beforehand. I guess, has your investment thesis changed over the past year? I mean, this is his question, but I'm also curious as to last summer when you were sitting in your office looking at deal flow, have your opinions or your process or what you're looking for changed over the past year or even longer?
Yeah, definitely. I mean, I think, your process always changes because you're always learning something new. I'd say my thesis hasn't changed a lot, but maybe my process has changed some. There's some deals where in the past, I would spend probably too much time due diligencing them when, I probably knew within the first 60 seconds that there was no way I was going to invest based off the team. And so that's kind of one thing that I've changed, something like that. I won't bother DDing any farther or taking a second meeting. I'll just say, thanks, but no thanks. And that's allowed me to move a lot quicker and kind of look at more deals and do things a lot faster. Because looking in hindsight, anytime I ever did somehow convince myself to invest in a deal where I wasn't at 120%, sure of the team in the very first meeting, it was probably a mistake. That's probably the one thing that I've changed over the years as opposed to when I first started investing. Also, when I first started investing, I focused a lot on the product. Product's important, especially if you have product market fit, but it requires evolving and it's going to change a lot. And it turns out that the product isn't really that important when you're an early stage investor. Obviously, if you're investing late stage, it's completely different. But I think early stage, the product is something where it doesn't matter a ton relative to the team and in market size, just because the product's going to change so much.
Yeah, that's fair. And it's definitely, I guess it's okay for a product to evolve. I'm wondering whether the market is okay with that. I mean, I wouldn't say Ethereum's narrative has changed because I'm okay with it being not malleable, but able to evolve to fit whatever market it can dominate the fastest. I mean, that's the whole point of crypto evolution here. But I'm wondering for smaller projects if investors and stakeholders would be okay with that if they had such a specific focus. I guess, do you mean that the product could evolve in a sense that it's better than it was before? Or do you think like hard pivots here where they just totally change their business model into something that works?
I think more the first one, in the sense that it's better than it is before. There's some data on it, and people love to talk about pivots, but it turns out actually that most successful companies, weren't created by a pivot. And now I'm sure on Twitter, everybody's going to respond with all the ones that were, like Slack is a really famous example of some company that was a pivot. Lyft actually was kind of sort of a pivot. But, for the most part, people have done a few studies on it, and most successful companies didn't actually pivot in a hugely significant manner. They may evolve the product in a significant manner, but they didn't pivot into an entirely different business line. So I think I'm more talking about, evolving the product itself. And one example of this is you may, look at a company and say, wow, I can build the product in a week in my basement on my own. That's a pass. That's something I probably did a few years ago. And sometimes that's the right decision, and sometimes it's a mistake. Sometimes there's another reason why that company is going to build a huge moat and why you should still invest in it. One example of this, not in crypto, is a company called Peekaboo, which StartX passed on because they thought it was completely indefensible. It was a stupid app, they said, that allowed you to send disappearing messages and images. That company was Snapchat. And it's a company that, you could build in a weekend, but that didn't matter. What mattered was the network effect that they were able to create. And so I think that's kind of the way I think about product now is your product doesn't even necessarily need to be the best relative to your competition. It's all about what sort of network effect you can build around it. You see a lot of early stage companies, they have, these big tables where they have a checkbox, across a bunch of different features relative to their competition. No customer decides to buy a product based on that. The customer decides to buy a product based on what's different. I love to see one of those diagrams in a deck where all the competitors have a bunch of checkboxes. And then the company that I'm looking at has one checkbox in a different area that nobody else has. That's the sort of thing that, that's why people use a product. There's some reason that makes it different or significantly, 10 to 100x better than the competition. Not that you have, a laundry list of features that everybody loves to use.
Yeah, of course. That's a great way to think about it. And I guess the other thing about your investments is you guys are in a lot of deals, right? So I'm wondering, other than crypto happens in the wild, so we could all see what's going on with blog posts and Twitter and all that, but I'm sure that you get a zillion emails a day. I'm just wondering, how do you actually keep up with all of these projects and their progress? I feel like for non-VC investors or people that aren't in the world, I think people kind of assume that you kind of write the check and forget. But in reality, it's nothing like that. There's probably a lot of interplay where you're helping them and networking for them and answering questions and possibly being a therapist at times for the founders. What actually is the process like after you guys make an investment?
Yeah, so a lot of it depends on the company. At the very, very bare minimum, we're requesting data from these companies on a monthly basis. Some of them don't always give it to us, making sure that, we call people up and get an update on a quarterly basis across our entire portfolio. We have a pretty large portfolio. And then, but in practice, you're interacting with most of the companies much more frequently than that. Our larger investments I interact with, on a weekly, in some cases a daily basis, helping them with things like what problems they're facing in their business, helping them with hiring. We just hired a director of platform, a guy named Franklin. He used to be one of the people who ran JP Morgan's blockchain team. So he's kind of helping expand that, helping our companies hire and solve kind of various problems. But part of it is kind of, talking to the founders, figuring out what their issues are in the company, what sort of things they need help with, and then trying to figure out, how best to help them. Sometimes I'll go into the office of a portfolio company and try to figure out if something is going wrong, how do we fix it? Things like, how do you get the engineers to be motivated to work on a problem? How do you make sure people are actually working on the problem you want them to be working on and not some ancillary thing that's not really important? How do you stay focused? All that sort of stuff are things that we help companies with on a pretty regular basis.
That's huge. And I guess one of my last questions for you on the VC side of things is, what's the biggest reason that an investment you guys make could fail? I mean, not an investment you make, but I guess the protocol project or company you guys invest in. Is it product market fit? Is it distribution like you talked about? Is it incentivizing people? Or do you think it's issues between the founders? I'm always curious as to what the main reasons are for an early stage project to fail.
Yeah, I think I've thought about this a lot, over the course of hundreds of deals, but I think at the end of the day, there's a huge reason why, there's 1,000 reasons a company can fail. And so it's kind of like there's a big laundry list. But I think if you look at the most common ones or the most kind of what way could kind of summarize them all, I think it would be, surrounding the team and specifically surrounding, if you don't have a good corporate culture, that kills companies. And so if you look at kind of what sort of characteristics are important in a culture, it's, being able to move quickly while at the same time doing things well and following through, having people who can really take initiative, people who can burst through brick walls, people who can really kind of solve the problem when it needs to be solved, people who don't say, well, that's impossible, but they instead, figure out how to actually do it. And if you don't have, some sort of good set of cultural values for your company, that's where everything else stems from and where it all kind of falls apart. It sounds like some new age kind of BS, but it's, I think it's actually the truth. And so if you look at that, that extends into hiring. So if you're hiring the best candidates, you have a significantly higher chance of winning. And if you're not testing candidates properly, you're not going to hire the right people. If you're not testing them for these sort of cultural values that are important for your company, you're going to end up with the wrong team. And that's going to end up kind of causing your ship to sink. And then, of course, there's some reasons that are always outside of the team's hands. You can have a really good culture, a really good team, absolute animals at execution, and there's just no market demand. That would be the kind of second biggest cause, I think, is just lack of product market fit, primarily due to lack of finding market demand for what you're building. But I think the first one is actually much more common, where you have an idea that makes sense and there should be market demand, but for some reason you're not doing well on the execution part of it.
Yeah, execution is huge, especially for early stage companies. And my last question for you, Joey, is I know you said you were doing a lot of time more zooming out and looking at the space, I guess at a higher level. And you guys are making investments all day, and I'm wondering, how do you think mentally about, hey, Bitcoin's awesome, it got us all in the space. I personally think it'll be fine and grow. But how do you internally debate, hey, there's other things to invest in beyond Bitcoin? I mean, you guys are making most of the best investments in the space, but I'm just wondering how you kind of go back and forth with this. Like, we're kind of investing in a new age where things aren't developed yet. We're building out the infrastructure, and it's very hard to argue the viability of these things in the face of Bitcoin. But the other side of that is that we're building out an entire new tech stack, and a lot of this will take investing in things that aren't clear today but make sense on a day-to-day basis. I'm just wondering how you think about early stage versus Bitcoin, I guess.
Yeah, so for us, because of the fact that we, separate our funds, we have funds that trade kind of liquid stuff, we have venture funds, and then we have a Bitcoin index fund. It's relatively simple because they're segregated like that. So we're not, one of those firms that has a big bucket of everything where we kind of mix it all together and then have to decide on, an exact Bitcoin allocation percent. Instead, kind of our individual LPs decide that for themselves. I think, though, to answer the question, though, because that's kind of a cop-out answer, I think, to actually answer it, the way I think about it is, Bitcoin, I really think, does have a very good shot at being this sort of digital gold asset. If people have done surveys of millennials and you ask them, if you had $1,000 extra and, you had to invest it in something and you can invest it in stocks, bonds, or Bitcoin, which would you choose? And most people choose Bitcoin. That's obviously not true if you ask the same question to, say, baby boomers. And so people are becoming more and more familiar with Bitcoin as an asset. And I think it sort of is like the millennial equivalent of gold. And the same thing's going to happen with, newer generations as well, I think. So that's the way I think about Bitcoin. I think it makes sense to own, a certain amount of that in your portfolio. And then everything else is actually the 0 to 1 tech disruption here. Bitcoin, this is probably pretty controversial, but I think it's not really a huge tech disruption. Proof of work is innovative, very cool concept and idea, but it's really almost like an economic hack powered by tech, because the tech enabled the fact that you could have this currency or form of money separate from a government that was, impossible to shut down and stop. But tech's not really useful outside of that single fact. And that's a huge thing. It's really big. Gold is an $8 trillion market cap. So it's a hugely impactful, kind of significant thing. But I think if you look at, how does this impact people's daily lives, Bitcoin doesn't really do that much. It's great for black swan stuff. If you're in a totalitarian regime, you manage to get your hands onto Bitcoin and emigrate to, Europe or the United States. That's really great for you, because in the past you would have just lost everything in your existing regime. That's a very small amount of people. The average person isn't really facing that problem. But the stuff that's going to actually touch people on a daily basis, I think, is more, smart contracts, decentralized apps, decentralized finance, that sort of thing. I think that's kind of the key. People talked about this space in the internet. I think that's kind of the internet analogy is smart contracts and decentralized apps. That's going to take a lot longer to play out, but I think that's where, this stuff actually touches people's lives on a daily basis. So I'm super excited for that piece, because I think that's where you can get the next 100 to 1,000x from a return standpoint. I think it's unlikely that Bitcoin can definitely go up another 10x. Whether it 100x is from here or not, that would be pretty difficult, I think, for it to go up 100x from, when it was at, say, 20,000.
Yeah, I agree. I think Bitcoin will move in absolute dollars and be a giant, but I do think that the next 100 or 1,000x returns will come from new protocols and venture investments. And Joey, sorry, one last question for you. When you're thinking about the tipping point for Ethereum, and I hate to cop out because I'm reading the book right now by Malcolm Gladwell, but when you're thinking about the tipping point for Ethereum where things just go crazy, what do you think that will be? Because it seems to me like there's enough innovation and mind share and dev activity that one day we're going to wake up with something viral. I know that's a cop-out, but I guess the better question is, if that is a scenario, do you think that people will have enough time to realize that and get involved? Or do you think this is something that is somewhat more of not a random event, but an event that's really hard to time, and if you want to get involved, you already should be?
I think people will have time. The thing about paradigm shifts is they almost never happen overnight. I mean, they do from like a geopolitical, risk standpoint. Like if some country's going to go to war, that does happen overnight. But things from a tech standpoint, they basically never do. It's not like one morning, you woke up and the internet was this huge thing. It happened over a period of years. And in fact, people kind of got ridiculed in the beginning for even thinking it was going to be a thing. I think we're kind of in that stage right now. People on Twitter love to make fun of people who think that this DeFi stuff or Ethereum or smart contracts is going to go anywhere. And I think that's a great time to get involved because you're sort of in this trough of disillusionment. But I think even when it starts to swing upward, say there's a decentralized app that has, even like 500,000 monthly active users, which is a good amount, but it's not crazy for a tech company. I still think that would be a perfectly fine time to get involved in the Ethereum space. And there will still be a ton of people and critics who say it's, stupid and never going to work and completely useless and makes zero sense. And so there's always kind of like, even if you're late to the party, you're never really late because this stuff just doesn't happen overnight.
Yeah, for sure. Well, Joey, thanks so much for sharing all the great info on Augur and your VC and investing side. I think it's super interesting, and I really appreciate your time coming on the podcast. And just let people know where they could follow you and learn more about Augur and Pantera.
Sure. Yeah, so you can follow me on Twitter, just at Joey Krug. And then Pantera is just at Pantera Capital on Twitter. If you want to learn more about either, PanteraCapital.com and Augur.net are the URLs for both.
Awesome. Joey, thanks so much for your time, and I hope you enjoy the rest of your night.
Yeah, thanks for having me.
Hey, everyone. Thanks for listening to the episode. If you can go to iTunes and hit subscribe to the Chain Reaction Podcast, it'll go a long way in helping us reach new listeners and help support the show. Thanks again.